All right, welcome everybody. The day Thursday, the day before option expiration, we're done with a quarter. So where have we gone in the last quarter? And I'm going to make a quick wrap up of the macro, and then we're going to talk about DoorDash, NVIDIA, Apple, Semiconductor, ETF, SMH. We'll take a quick look at Amazon, AMD, Visa, the SQQQ, and the NDAQ, and we'll probably cover that hopefully in just the next 5 minutes or less. Let's go. Bottom line, the market, where have we gone? Since almost March, the advanced decline is actually since almost the last option expiration, March 21st area. You'll see that the advanced decline is actually the same place. What does that suggest? Not much has really gone up in this market in the last quarter. Pretty much it's been mega stocks. And if you take a look at the volume action since that particular time, since March, we haven't really accelerated. In fact, the on-balance volume only appreciated over the last couple of days in the S&P 500. So today we had one whale of a particular market. This is a whale of a market in the sense that our indicator on the 60-minute algo went short. This is a pretty reliable algorithm as well as trading strategy performance on this. Left to right does pretty well. Its last peak equity high was May 2nd. It's been chopping and churning. Bottom line, the market had a nice little trade. The green dot means if it's connected, buy signal connected, it shows you where it gets in, where it gets out. You'd see that it didn't do anything, bought that little uptrend, got in, got out really quickly, and now it went net short. Now, I wouldn't say that I'm trying to pick a top, but the system's gone short. Some of the shorts like this one here didn't work out too well, but I can't dismiss the fact that the volume indicator, this John Person volume indicator, is under a bearish divergence. Breadth is not really all of that. The advanced decline cumulative ratio line is still in a divergence pattern. So it does lead us to believe that the market's ready for a little sell-off or some kind of a correction. We haven't gone anywhere in the last quarter. That's the funny thing, according to the advanced decline. This is the algo 5-minute day trade model, which picks up. Remember, if it's a green line, that means it shows where it entered, where it exited, and a green line is a profitable trade. It's still in an overnight in this dead hour. It went long, as it shows you here. At 3:35 in the afternoon at 46.5, and it's still long. It'll either stop out or take a profit sometime in the after hours session. All right, so enough of that. Let's get bottom line talking here and get into what I wanted to cover as far as stocks. Semi, SMH, quarterly pivot, monthly pivot, bearish engulfing pattern. SMH, 13 million shares, almost twice the 10-day average volume on semi. So my 2 cents, obviously, NVDA was pretty much, it was all based on NVIDIA's movement, AVGO, and then SMCI. Those are the three big whales that the SMH trades off of. My guess is that you get any type of, especially in NVDA, my guess is that it has a huge amount of open interest on the 139 and 140 strikes for next week, as well as this week. My 2 cents is it gets one more test up into this 136, 137, and then maybe we'll take a look at buying some puts. The volume did deteriorate, and that would be on NVIDIA. I don't think a top takes one day. Sometimes the market makes those little spikes, comes down and retests the highs, and that's what we have to look at to see what the high is about. But I could certainly see rotation coming out of the market because this market has moved up on air, negative volume trend since June 7th. So approximately since 121 up to 140 has been on like negative volume growth. So it's not, maybe it's short selling, feeding on itself. People buy it and sell it, day trading. Maybe also it's got people sell it, get stopped out, they get back in, they sell it, they get stopped out. Either way, the momentum of volume is not positive on this rally, and it's gone ballistic. Here's the monthly look. It's just been straight shot rocket ship. SQQQ, let's take a look. SQQQ, it's the inverse relation, the inverse ETF. When the NASDAQ goes up, this goes down. When the NASDAQ goes down, this goes up. This is an orange candle, which signifies a John Person high close doji pattern. Now, one bar in of itself is not a big deal. The momentum of volume wasn't really all that positive. So in the SQQ, I wouldn't say, gee, this is one of the greatest buy signals or inversely sell signal of the Qs. But the Qs today also exceeded its 10-day average volume, which is an important thing. And as the SQQ showed as a buy, notice this purple candle, that's a low close doji sell. So we want to see for tomorrow, it's option expiration. This is kind of giving us some signs that, you know, things are maybe getting ready to change. At the very least, we did get another rally on light volume, even on the Qs. So it's susceptible and vulnerable for pullbacks. Is it going to be easy? Is it going to be fast money? Possibly, but I don't think it's going to be. It's too easy to have a sell signal right ahead of an option expiration on a quarterly basis. So with this particular option series, I would suggest maybe it chops around and then we look at it in the next day or two. What do I like? What is interesting? As far as a bearish play, this is interesting. DoorDash, monthly sell signal, weekly been in a sell signal. It went down. It stalled for the last 1, 2, 3, 4, 5, 6, 7, 8 weeks sideways. Today generates a daily sell signal. Not fantastic volume, but I would watch this market to see if we get a Friday close less than today. My 2 cents is if market wants to head back to possibly where it began the rally, which is around $100. That's a 10% downside move. We'll be watching for DoorDash on Friday's close. Apple, AAPL. Apple generated a PPS sell signal in of itself, not a big deal. But the relative performance with the PMC and the deterioration of the short-term volume, the 60-minute, suggests that it's vulnerable for more downside. My guess is it stays in a trading range once again, and we look for a little rally up around 214 or so and see if that rally does not hold. And then the next subsequent sell signal might be more meaningful for a pullback to fill the gap and get back down to 200. So that would be my outlook there. So what do I really like? Interesting that AMD had a short covering pop today. High close doji. Volume wasn't fantastic. Not a big truster of it. I just think it's going to be more sideways market. But I wanted to cover the entire semi-sector for you, the big dogs and then the lagging dog, which is AMD. Visa, on the other hand, financials started to get a little bit of a kick today. Bigger volume in Visa, decent size volume, cumulative performance. Volume over time has been doing very well, especially on the monthly. Visa, odds are you're going to see a 282 print. Watch for a recovery into Friday and into the following next week. NDAQ, it's an exchange. Yes, it is. It's been beaten to Dickens with an ugly stick. Had some decent volume today. Here's the volume trend, the momentum. Had a daily buy signal, looking good. Halliburton, another big volume trade today, exceeding its 10-day average volume. You know, the energy sector was up, but I'm thinking Halliburton was looking a lot better. It fell less than this name, Schlumberger. But with that said, Halliburton, the energy space might see some recovery. This could be option related as well. Quarterly window dressing, but Schlumberger had the most to lose. Maybe it's got a little bit more upside to gain and another maybe 5 to 8% to the upside. One of our trades that we gave out this week in the newsletter was Gilead Science. So basically we put this out every weekend and we look to buy certain things. Beamer Imaging, look where it says high risk 289. We've been working those orders forever. We made some money in that earlier this year. And that's why I got out. And I'm like, you know what? If it comes back down to 289, I'll buy it. It's high risk because it's kind of a stock that could go to $1. So you don't want to buy 20,000 shares of this thing. It may give you a heart attack. So, but Gilead Science, we had a buy based on a weekly pullback, 63.28. It did get filled on Tuesday. And I want to share with you, not to brag, but just to share with you a pattern that we see a lot in the market. We call them pumps and dumps. So Gilead, G-I-L-D. The only thing that I saw was a buy an improved volume over time on a weekly basis. And there it is. So it was added as a buy to look to buy a pullback at the 63.28 level. And not only did it get to 63.28, but on Tuesday, it fell all the way to 60. What was the actual low here? 63.18. No, it was 62.69. I mean, they really put the hurt on this trade right before an announcement. So what we see in the market a lot of times, and I don't think there's a really good rhyme or reason of why this phenomenon happens, but right before big moves come, the market dumps, wipes the book out, gets every long out that it may have had to stop because they took this low out by 2 cents, and then doesn't give a chance for anyone to do anything and gaps higher. Now, the news is that they have an AIDS HIV drug that's gotten some good results. And, that was on the FDA announcement for today. And that's what caused this stock to be up nearly 9%. Did I know anything about that? No, but I'm going to tell you somebody did, because the volume patterns were just too, they were getting better. The sell-off on Friday wasn't all that monumental. And then towards the end of the day, the selling pressure started to weaken. Look at the momentum. The momentum wasn't getting worse. This market made a newer low, close from the preceding 3 bars earlier, and the volume was lighter. So it was showing that maybe longs just liquidated, or maybe it was artificially being suppressed to the downside. That type of pattern we see a lot. It'll form a weekly buy. We got out of half of that trade today, right around here, by the way, and I just trailed the stop to break even. So what I'm looking for in the market are big volume trends, obviously, because there is something about people knowing something ahead of John Person, for sure. I mean, I'm not saying insider trading information, but some people have better insight or better information. And some of these stocks all have something in common that have these big pops. Volume precedes the price, and the stocks that we give out in these YouTube videos, I'm picking out the names that have decent volume greater than the 10-day average, and in other cases, trending volume with my proprietary momentum volume tool. So it is something worth watching, and that's why we've been putting out these trade setups. We'll see what happens over the next couple of days for option expiration. That's all I have time for tonight. I wanted to cover those names: Dash, NVIDIA, Apple, the SMH. I think I did share that chart. Bottom line, bearish engulfing pattern, weakening volume structure. My 2 cents is this area in here, 274, if it fails the midpoint of that red candle there, it has the ability to see a little bit of not bloodletting, but a pullback. Let some air out of this massive tire. And it wouldn't surprise me to see a 257.5 print, 255, somewhere in there over the next 2 weeks. So I'll keep you updated. Hope this information found you well. More importantly, if you like the video, hit the like button, the thumbs up. And if you want, please give us some feedback if you want to see more of these types of videos. And also, you can always subscribe to personsplanet.com and get the YouTube videos as well. Thanks again, everyone. Have a great evening.